Okay, so welcome to today's class. As a form of disclaimer, please be aware that these videos are for educational purposes only and that past performance is not indicative of future results. If you need to know more, please visit our website at www.esttrader.com. All right, so we'll look here at the S&P 500, where at one point it was down more than close about a 1%, currently at 3813.72. So created a new high last Friday, 3832.72, 3832.51. So creating a lower high on a smaller time frame, and that one right here. So currently correcting itself, higher low. The question now is, can it create a new higher high or a lower high? So if there's a lower high, then somewhere sometime in the long run, so somewhere here, let me put in, and create a lower high, then this will be a good price for selling. And let's say it goes through there from an area of supply. Here, notice you have an area of demand through there. Currently, the price is at equilibrium. And if it chooses to basically drop, then bam. So there's also a lot of volume right there based on today. So from the perspective of all that force, despite having a lot of force to the downside, overall trend is still basically an uptrend. Okay, so if that continues, then easy, the price will, from a lower high, create a new lower low there just to fill in this gap before it could manage to go further to the upside over there. And see if I look on the weekly time frame, we cannot ignore that there was a lot of volume as well, being at the beginning of the week of Jan, breaking out from this consolidation. Notice it went further up bit by bit. So it created a new lower low here though, but a new higher high. So I have no doubt they have to fill in this somewhere in the long run if it chooses to correct. And if the correction will happen, it is either around the 3600 or 3500, somewhere there within the area of equilibrium, which was area of supply here before that broke out, that became a demand. Okay, so that is the weekly. So medium longer term, I'm still basically still very bullish. Nothing is dictating, but you can see on the other hand here too, it's decreasing in volume, so it's way overbought. There could be a sign of reversal pretty soon, where it's gonna, the balloon's gonna pop, and then so medium longer term still basically bullish with a condition of correction. Daily time frame, on the other hand, I'm also bearish from here on forward, just for the next couple of days, just to correct. And if we're going to deal and look in terms of news for the week, there's really nothing much. So notice here, nothing in the US. The Boston speaks, which is a low impact. Tuesday, nothing. There's also a lot of low impact. NBC member broadband of the UK is going to speak at 2 a.m. Pacific Standard Time, and the rest are basically low impact. Wednesday, there is a medium impact where Lagarde is going to speak based on the euro. You have CPI, core CPI at 5:30 in the morning, which is 8:30 Eastern Standard Time. Thursday at 9:30, which is 12:30 p.m. Powell is going to speak, which is a high impact. You have unemployment claims there too. So from 787, they reckon to 785,000. Well, with the COVID, I don't know how low. Well, I don't understand why it's a reduction there rather than an increase, but we'll see. Friday, you have core retail sales and retail sales. Um, that will be a big indicator too for the week, and see whether if the S&P for the week at the end of the week, either this will push down to create a bearish engulfing, or this will be a continuation back to 3900 even, right? So it all depends on what the news will dictate price. News creates supply and demand, and without news you won't see uh, simply a trend of the markets, or anything in general. So that being said, let's look at the VIX. From a level of demand, currently it gapped up from the closing to an opening today. So we go to a daily time frame right there. So they are definitely supporting then this price within this range in a slight uptrend. So since that gap has been formed, they will fill that gap there too somewhere sometime in the future. But other than that, maybe perhaps back to around the 26, 28. That also means that the S&P is gonna correct as well. So since if you like to trade futures, simply I created as well a couple of I did a test trade, and then here's a limit order to sell. Here's a stop loss. Here are potential target points at this point. So they're basically one is an automated one, and one is a manually trade one. So that's where, in terms of shorting, I believe the other one, if you SPXS, let me look at it at ETF. It's also pretty cheap. Ooh. So it's 37.21. Used to be $3.72. So they changed it actually. SPXS. It used to be $3.70. I don't know why. Now it's back to 37.20. So that's the ETF of the S&P. So that's why it's currently on the cheaper end at this point. All right. Dow is the same. Um, Actually, it's a clear cut of a lower high where a peak is currently being formed. Lower high, lower low broke through the last low of last Friday. So if it chooses to do this, then we can see a better bearish candle before correction, or basically the correction is happening before continuation of the price. Dollar index, as we have analyzed last week, looks pretty neat. So touched, head back to the supply that used to be demand here. After the breakout, equilibrium, supply, back to equilibrium, back to the major area of demand, and back now to the supply area. So based on a weekly time frame, depending on what it's going to do, um, perhaps by the end of the week could be another bullish candle here. So from that stabilization, stability point of view, you have a doji, so you might form just like this, and then next month, February, you'll have a bullish candle that will form a morning star that is a correctional pattern. So correction, continuation, correction, either continuation to retest or a higher low to head back right there to create a new higher high somewhere sometime in the future. So when you just imagine it will go through there all the way to 2022 even, if it chooses to do that. So, but if not, this lower high still plays a very big role longer term. So longer term could potentially create a new lower low just to fill in this blank somewhere around back to 80. Okay, go back to around 2000, from 2007, 2011, and to fill this blank or to fill this empty space. Since the secondary uptrend got broken, so it could potentially be on a bearish move till 2022, somewhere here. You just want to imagine goes up and down, all the way down there. So if it chooses to do that, then of course the market results will continue to keep going. But remember, every stage in the markets is always different. 2008, it's from 7, it's actually 6 to 7. These were the tough times in terms of the financial markets. Here was through mainly more about Trump. Now is through COVID. So there's always going to be something. And then if you've also been following the markets basically in the past, then you also have here during war times in terms of act of terrorism, 2001, right? So 2001 through act of terrorism. So there's a lot of war happening basically through Iran, Iraq, all that component. 1996, same thing. From actually from here 2000, you had the economy was really good. So if I go back to, let me just go back with the S&P for a sec. So 2000, from the start of 2007, 2008, this was through the real estate market, through the financial aspect. Here was through Trump. Currently, May 20 here, through what was happening here was the pandemic, and then continuation. I don't know what's the next one, just about to come. 2000 tech boom from 1996 pretty much the year 2000 was a tech boom. Here was also war after the tech boom basically exploded to the downside, and you also have war happening through there too. So every cycle has some form of story depending on how basically the dynamics of the global markets, and hence that's why everything's all news based. So notice that amount of volume from an increase to decrease. So interesting. That's why there's a big divergence between volume through there and price heading up. See how steep that is? So when something is so steep goes to the upside, I have no doubt there's also a lot of steepness when this one will fail and tank. Because to the upside, it takes time, it takes a lot of energy, and then with gravity, this one will tank faster than you would basically expect. When this happens, you just have to prepare and keep your basically options open, and bam, you'll have either you make a lot of money in the markets or you also lose a lot of money, right? So, but that is what's currently at the forecast, what you see on the chart. Alrighty, so let's continue. Any questions, Perry and Trong?
No.
Cool.
I'm good. Thank you.
All right. So dollar index still very bullish, but also level supply through there, and hence with the euro, you just also have to be aware. Let's look at the low of this one, 21.32, 121, pretty close. So it's still pretty much a higher low through there. So based on that higher low, if it continues, there's going to be some form of a rebound for here, basically. So this is what I'm currently looking at for today as a small test trade to go with the trend to the upside. So there's a potentiality to profit basically trading the euro against the US dollar. And let's look at oil. Oil finally simply as well, after that very bullish candle, way overbought too in my opinion. There's also stability happening there from a stability point of view, stabilization, correction before a continuation. That's both Texas oil and crude oil. So I'll notice as well decrease in volume, stabilization. That's way overbought conditions, and then heading back to maybe perhaps 53 or $52 a barrel before it can continue. Mind you, though, we cannot go short because medium term is still also very bullish still to longer term. However, this could just be also a correction before it could tank. So that lower low, lower high, they're just filling the space, the empty space within this trend line. So boom, right there. So longer term, I'm bearish with it. So that correction already happened. And if this one will fail, it will fail. In actual fact, wow, it's almost gonna be a year, sorry, when this actually happened. So time goes so fast. So monthly, I'm bearish. Weekly, same thing. Perhaps this week, some form of stabilization, and daily, there we have a peak forming there. So there is a good chance that this could fail. That being said, the dollar CAD went to 28.30. Actually, it went so close then. Let me see. So, uh, so Friday I put the stop loss just to break even at 128.65 because I didn't really know what was going to happen to you. And the reason when we discussed this that there was a potential morning star right there. So you have the bearish candle uncertainty, that morning star, but the price didn't get triggered at 127.19. That's the price that we wanted. It went up in there, but it closed as a doji, as a uncertainty. Then Friday was the same. So easily this could, since it created a new higher high, this could easily just tank to the downside, right? So I put the stop loss to break even. And then to be honest with you, the majority of the trades I also closed the majority and just left it there. So the question now is, since that broke all the way to 27.91, 28.30 even, and I believe the target point was at the 128.50, pretty close. I put in actually at 5.0. It was easy for me to put in within the uh, fib 2830, 2850. I put in a 2850 here within that high on that side. So now that it basically retraced a lot, in my opinion, there's another opportunity to go back in to go long. So I'm maybe at the end of this one, if it's just currently stabilizing itself like this, I'm going to put in a back into another position for it to go long because the daily time frame is very bullish right there. Okay, so they have to, from a correction continuation, either a new lower high or higher low as well. 4 hours even better. So 4 hours basically gave everything back from that news early this morning. So but it's okay. That's from a correctional standpoint. And then maybe perhaps somewhere here will be another good opportunity through there. But let's look at the moving average. Yeah, it's first time crossing the 8 and the 10. Tomorrow would be a possibility of going the price be above the 8 to 10. However, I'm not gonna go beyond that. If it goes beyond to create a new higher high, that's awesome. But if not, no, because it's still basically also on a downtrend. Okay, so maybe a short term, another short term. So from an M1 to a potential M2, which didn't happen. Currently now with M3 forming tomorrow, then you'll have, depending on what it will do, you have a potential that it could potentially um, continue to create a higher high or a new lower high as well. Weekly, and this is also how the dynamics, that's why it all changes from a bearish to uncertainty to a potential bullish. So same thing in terms of the calculation through there, halfway mark around 128. Can they finish strong within the trigger point? If it does, then you have a nice morning star as well as a correction. Then this will head up all the way through there. The first level impulse, major impulse, is through that. 32, 129, 28 will be the target all the way there as a form of correction before it could continue to drop even further. Because they have also to fill in that space here within the trend over there, which makes sense. Either there or somewhere within this space. And if it breaks out, easy, this is gonna have a bigger correction because they're way over, also way oversold there too. And that would be coincide. That could coincide with oil in terms of the correctional component through there. All right, so that's with the dollar CAD. It was a nice one. Um, dollar CAD. Looking at copper. Copper on a weekly was bullish, currently giving it back. Makes sense. Very nice. I mean, didn't expect today though that's gonna break the 8 of the 10. Thought it would just only hover around here, but that dropped significantly. So that being said, Aussie was the major cause there too, because currently the stabilization or gold stabilizing itself is also stabilizing itself through here. So buying is a much also better option. You're heading back to around the 78. If it creates a new lower high, then shorting will be that's a better price of selling. Right now, price is at demand, so no go. So you see here, 1 hour, you have an M3 right there, higher low. Too expensive though. It would be nice if this will head back 78, 76.90, somewhere there from an area of demand, or 76.80. But if it drops somewhere here, this will be a really good price. Since copper and gold are the two major resources, what the Aussie, in terms of the currency itself, it goes up and down. All right, let's look. We've done euro. Let's look at the pound. The pound stability, but you have an M3 to short. Very nice. You have a lower high, two bunch of lower highs. But you just got to be aware that these are minor lower highs. The major higher low still plays a big. It's in terms of precedence. Better if the price will come back on this side, and then a clear cut that this will tank. So could potentially continue. Still very bullish, whether we like it or not. So I'm bullish with it, but there's an M3 to short, of course. We can short this one as a form of a test, and then better is it comes through on that side. Kiwi, same thing from a correctional standpoint. Better for basic to go long. So a lower high will follow suit pretty shortly because that low got broken. 7152.8, 7146.3. Discuss about dollar CAD. That one's a nice one. Dollar Swiss. So from that M3 perspective, continued through here. That 89.20, 89.18, 89.18, 89.19, 89.20. So created new highs. So what does that mean then when something has been broken? So an institution were willing to purchase the price higher compared to that. Therefore, now that the new higher has been formed, once a higher low has been formed, the next part of the series will create a higher low, either a new higher high or a lower high, and that is going to be a correctional move from a micro technical analysis point. Okay, so still bullish. However, it's also expensive. Prices are already at supply. If you're seeking certainty, then here will be a better price of buying 89.16. So that's around 80, 90 pips to the downside. Dollar yen was the winner. Created new higher highs, no doubt. Also, lower high is going to form. A new higher low will form as well, somewhere, sometime in the future. Okay, so that coincides with the dollar index being also expensive. That's why there's some going to be what do you call it, correction happening to the downside pretty soon. Aussie, Aussie Japanese yen, still bullish with it. So there's an uncertainty. So I'm bullish pound. Ooh, okay. So it didn't want to form and fail here. Odds and probably will continue to drop. Is also more than likely, but also in an uptrend, buying is a better option. From this hammer, you could continue on to 41.50. CAD yen, same correction before your continuation. Swiss, same continuation. Euro yen, same continuation. Kiwi, same. So everything's in a correction. Okay, so that is the market overview, and your goal right now for a form of exercise is to find a potential trade, create a plan, and which time frame you want to choose, and then execute that. Or when are you going to execute it? How are you going to execute it? What is your risk management? What will be your money management? Okay, so that will be your exercise for the next 20 minutes. Any questions?
No.
Awesome. All right. So
I'm good.
I'll give you guys about 10 minutes to do that, and then we will continue in terms of practice. Okay.
Okay.
Perfect.